Everybody tonight. We are about to get started. My name is Guy, and some of you have introduced yourself. I see that we've got about, almost 10 people here, so very exciting. I'm just so glad that you all have made the time for this. I'm proud of you for showing up today. I don't know if you've read the story about this particular graduating class at Yale, but they did a survey and they found out that only 1% of those people actually had written goals or written plans, or as we might say at Lumi Wealth, an algorithm. And 10 years later, the 1% of the people who had written plans had 10 times as much wealth as those people who didn't. So the fact is that something that you'll pay attention to, something that you'll focus on, is definitely your way to get better. So I'm going to go through two quick housekeeping items. Let me share my screen here again. And that is not it, so I apologize. There we are, hopefully. Good. Yeah, in technology. Okay, so before we get started, I want you to know about two quick housekeeping items here. The number one is I'm going to go over some question and answer at the end. You're welcome to type things in as you wish on the chat. I will take a couple of breaks to get to them, but if I don't, again, we'll have some time at the end. I have a favor to ask of you. We both know that if you're anything like me, you probably have about 20 windows open, 20 tabs on your browser. So if you would just shut those down and give yourself the gift of actually paying attention to this. I probably won't even use the whole hour, but do plan to stay at the end because Robert, the chief luminary at Lumi Wealth, has convinced me to give you guys a bonus that people regularly pay a few $100s for. So I said I will only do it if people stay to the end. So be sure to enter your questions in the chat, or if they're kind of personal, in a text file. And let's see. The course here has changed its name several times. It's been become a Bulletproof Trader. It's been Market Mastery, Trading as a Business. The whole point is that people want to use trading to increase their wealth. We're at a very precarious time right now. Inflation, if you're a young person, you've never seen this. In 1985, I had a mortgage that was at 16.5%. And if you're not prepared for this type of an environment, things can go badly for you. On the other hand, if you are prepared, if you've ever looked at a chart of the S&P 500 that started in, say, 1981, when inflation was horrendous, what you'll see is that the acceleration of the return has just been, logarithmic. So what we're wanting to do is to give you a disciplined trading algorithm that supports your ideal lifestyle. We want this to be evidence-based, and we want to use all the rules for wealth creation. Most importantly, we want to put an end to the guessing, the wondering, and the worrying. So I know there's a lot of shy people here because people aren't using the chat, but just give it a shot. Try to characterize what frustrates you the most about your trading right now, because I hear things from people all the time, and I've got my top 6 or so. Here they are. The first is noise and confusion. As I speak to traders at Lumi Wealth, other places, even not hedge funds, even people who are aspiring to that, only about 1 in 30 can explain their method to another person. The biggest complaint or the biggest statement I hear from people is they want to remove the emotion from trading. That's a big one. And I agree that it is big. The reason That it's big is because it's responsible for making your performance less than it should be. Sometimes you make outright mistakes. Your performance becomes unreliable. And here's the thing about reliable performance. If you are trying to live off of this money, if you're trying to make your trading become the thing that gives you financial freedom, then your performance needs to be good enough that you can rely on it. Okay, that's very important because you're going to trade for a living, perhaps. I think that one of the things that frustrates people the most is that they know their returns are not reliable. They know subconsciously or, by looking at their balance sheet that they're not getting the returns that they need in order to accomplish the goals that they want. And sometimes they'll blame that on bad entries or bad exits. Some people even think the market conspires against them. But none of this is necessarily the case. However, it does form the basis for your endless changes, your aimless changes, rather, when you think, well, the system isn't working, I will tweak it here, I'll tweak it there. And when I say tweak it, let me tell you, if you haven't been able to define your system in the first place, then you are going on a random path, which will, I guarantee you, not end well. Trading is hard, it's demanding, it's rigorous. And before I go much further, I just want to tell you that there's a lot of risk in it. If you've ever opened a brokerage account, then you have undoubtedly signed off on a number of disclosures, and they are different for futures, options, forex, crypto, stocks, and bonds. You do well to look at them, and I hope that this is enough of a disclosure to satisfy all of the attorneys out there. So now we can really begin the webinar since we've addressed their issues. Finance is the place to be if you want to accelerate your wealth faster than anywhere else. Because of the scalability, and the fact that there are certain ways to create wealth for yourself that require very little manual effort or very little comparative infrastructure. And that's how you can get that kind of leverage and huge returns for yourself. However, you're not the first person to figure that out. So some really bad news is that there are thousands of documents and scholastic papers that are going to tell you that what you're wanting to do, the reason you come to this class, what you want to do is impossible. You can't beat the market. The market is so efficient that you can't beat it. Although people do that every day. In fact, there are people who make their living beating the market or finding a niche where those inefficiencies are just there for the picking. So I don't know if any of you have actually done this, but 90% of futures accounts blow up in 90 days. People put in their $10,000, their $5,000, maybe they even borrowed money to start their futures account. And within 90 days, 9 in 10 of them have become zero. The average investor's lifetime return is 4.9% a year. I'm basing that on data from don'tquityourdayjob.com. And look, I know everybody in this room is above average, right? We all are. So I know we don't have to worry about that. But you do have to look at least at the pull, because even a manager of a mutual fund has trouble consistently beating their own benchmark. So some of this has to do with asymmetrical information. Some of it has to do with ignorance of your own cognitive and behavioral biases. And some of it has to do with what I guess the internet will call the secrets of the rich. And put simply, these really aren't big secrets. They're just different rules, different tools. And there's no sense in telling most people about something like, let's say, portfolio margin, where you can margin your portfolio 4 or 5x in amazingly creative ways. Okay, but you need to have 100 or 200 or even $300,000 in your account to do that. So some of these secrets just aren't talked about until you're at the place where you need them. But my point is this: if we talk about them now, if you know what's coming for you, if you know what the next goal is, I think you're better prepared. So, along with that, just to let you know a little more bad news. Okay, the people who built this rocket and the people who do this sort of thing for a living and the scientists who do lots of math like this, they've all realized how much money they can make in the market also. And they're in the market and they're willing and eager to trade with you. Think about that for a minute. They're willing and eager to trade with you. When you make a trade, if you buy something, don't you expect the price to go up if you buy it? Well, have you ever wondered why somebody would sell it to you? Are they stupid? Are you so smart that all the time you're making the right choice? Well, no. And one of the things that people really miss is that um, they're concentrating on numbers, indicators, moving averages, and so forth, and they're not thinking about who's on the other side of the trade. And we'll get into that a little more later. And it's something that, unless you've been in the business, frankly, you really don't even think about, but it's very important. Been going at this for 10 minutes, so I think this is a good time to just kind of talk about if this is for you. Are you in the right place? So if you're excited and enthusiastic about learning and doing in order to get the returns you want, you should be able to devote 5 or as much as 12 hours a week to apply what you've learned in class and the assigned homework. Now, a lot of people will immediately agree to that, but it's hard. We're all over busy. We're over committed. You may have family, kids, etc. I have to tell you that if you think you can devote 5 or 10 hours a week to this, you really need to block it out in your schedule because it's going to take something like that. Also, you're in the right place if your own household bills are not a stressor for you. If you have emergency savings and the money that we experiment with in this class is not your mortgage money, then you're in the right place. More importantly, and even a little harder, if you're willing to examine what's behind your own eyes, if you're willing to confront a few painful things about yourself in order to get what you want, then you're in the right place. When I was a youngster, I was I was an alternate for the U.S. Olympic team. And that's not really a big brag because that was like the Jamaican bobsled team. We were awful. I think last in the world or something. But nevertheless, the training for that involved tears and anxiety and exhaustion and so forth. And that's what it takes to change yourself from what you were to what you want to be sometimes. Okay, nobody who makes a lot of money in this business is stupid or lazy. It takes a lot. So this class is right for you if your intention is to do it yourself. If you would like, if your intention is to have it done with you, if you want the support of a team, my own support, and so forth, then this is certainly a way to do it. Again, 3 ways to participate. Learn the stuff and do it yourself. Done with you, we do it with you. And done for you. I want to be very frank with the done for you part. Sometimes you'll embark on this. Maybe you've lost thousands of dollars already. Maybe you're a pretty smart guy or gal in your profession and you have lots of money, but when it comes to trading, it's just not working for you. If that's what it is for you and you give this a try, then we'll arrange to make it so that you can take advantage of the great returns that you're seeing in the class, even if you can't do it. We'll do it for you. We'll make an arrangement for that. So don't worry that you can't. even if you haven't been very successful so far. So look, if this class is right for some people, then it's wrong for some people. So you're in the wrong place. If let's say, if I can't be blunt with you, if you can't put your feelings in front of your results, this might not be the best place for you. This isn't for you if you're trying to use crypto or options or whatever to launder money, avoid taxes. I can't believe I have to say this, but experience kind of teaches me that. So no money laundering, no tax evasion, please. And it's not the right place for you if you're going to get really annoyed when I invite you to join my paid program at the end of this training. So today, my goal is to super expand your mind when it comes to the way you think about being a top trader or a money manager or an investor. You're going to get some actionable steps, and I'm going to share with you some more stuff at the end about the masterclass. I would love to get to know you guys a little better during our time here. Let me just check the chat just in case. Inconsistency for Michael. Hannibal, I hope you're able to hear me now. Yeah, I see perhaps you're not. At any rate, let me continue on. You're going to get some actionable steps, and I'm going to share about the masterclass. So my name is Guy Robert Porter, and in case we haven't met yet, either in a class or in one of those Tuesday night discussion things, I'm a fiduciary wealth counsel at Lifestream Family Advisory, and I'm a portfolio manager at the Engineered Risk Advisory. My grandma spoke Italian. Our little immigrant family settled in New Jersey, and I was the first in my family to go to college. So all my neighbors looked like this. I started trading exactly as a get-rich scheme back in 1987, doing just what you shouldn't do, which was I took some student loan money, and just a few months before the crash, this is 1987, by the way, just a few months before the crash, great uptrend, leverage from the options, everything's wonderful, it's going well. And let me tell you something. I hope you can see my cursor. This was Monday of the week. This was Friday of the week. This was the open on the following Monday. So to put this in perspective for you folks, imagine that you wake up on Monday and your Apple stock, which I think closed at 132.95 today, your Apple stock is worth 50. Your Tesla is 40. The spiders are 280. That's exactly what it was like on that horrendous day. And that was really relatively into the beginning of my adventures in the market. So I started back there. I have seen some stuff, and you're about to see some stuff. And if you really get into it now, look, it'll be as if you started trading at the bottom of the Great Depression or something. So while everyone is complaining about how bad times are, et cetera, you know, when blood runs in the streets, that's the time to make money. So during my time in finance, I've traded on the floor of the CME for like 2 hours. That was incredibly hard. I've had the privilege of assisting and observing how wealthy families maintain and pass their wealth on to their family. I've taught graduate and postgraduate students. I've run a financial planning firm. I still do. And I recently started a collaborative effort with some people at Lumi Wealth, as well as other places, and we're going to be creating some great things for the market. Later in the program, I'll let you know how you can be part of it if your talent points that way. So I hope that you can see today that I absolutely love what I do. I believe it's your right to have this kind of information, to participate in the wealth that everyone else is. So for the past few years, aspiring traders, fund managers, and investors have learned to get paid by the market. And, excuse me, I'm sorry. traders, fund managers, investors, they get paid by the market. And I'm going to show you how to use that information to protect your family wealth and the causes that you want. So in my day job, what I do is I get people from wherever they're at here up to wherever they want to be. And for folks in this class, I expect that, as I said before, you make enough to live life without emergencies. You're not trying to take $10,000 and make $1,000 a week to afford your lifestyle. It won't work. If you find somebody who works it for you, God bless you. It's not what we do here. Okay, we get people to a higher level of financial peace and order, in your case, through trading. Okay, now I wasn't always this knowledgeable. We all start as amateurs, as beginners. I've just been doing it longer. It was a little harder to start trying this stuff in the days before the internet. And yes, there were days before the internet. I had to buy magazines at a newsstand. I sent away for a paper catalog that had the finance books in it. And as a result, by 1997, I'd read about 250 books on trading, and all those books were in my house, which was a pretty strange library. But I know you guys can relate. You're probably enthusiasts. So even though I had a good background in science and a pretty decent background in statistics, I have a bachelor's degree in philosophy and neuroscience. I was taken in and charmed by all the lines on the graphs, all the pretty ways that it seemed like, wow, when this line shows up, all of a sudden you just buy here and sell there. And who couldn't make money this way? Well, perhaps you've already found out that in reality, all the lines and drawings are there, but you only get to trade from the right edge of the chart. And that's a lot harder than trading from the middle, which is where all these other things seem to come from. So there was a lot missing, a lot left unsaid, and a lot that was necessary for your success. And that's why it's my mission, both today and in general, to teach you the basic foundations of mastering your market, protecting yourself and your business, because I don't want that to happen to you. I don't want you to go through what I have gone through. Once you've raised your own family and you get to the point where you're mature in your business, your profession, etc., one of the best things I ever heard was, be the person you needed when you were 30. And that's what I'm trying to be for you guys. I'm trying to be that person who's going to help you through this. So this is the foundation that we're trying to teach here at the Market Mastery course. It has 3 phases. The first thing to do is to survive. Of course, once you have something that works, you want to scale. And then as your success becomes apparent, you want to make sure that you're able to protect it all. In short, what we're going to do is think big, start small, and then scale or fail. So here's the 3 phases. Let me just talk about phase 1 here. And this is probably the hardest part, because in the search for a system that works, you really need to delve into your own psyche. You need to get clarity about who you are. You need to know that you're unrelentingly going to be assessing yourself and changing, and monitoring and changing. If that's too hard for you, this might not be for you. Okay. The purpose of phase 1 is to get to your strategy that you can explain, an algorithm that you can document. And part of what we do is, I'm a philosophy major, so I like to think about things. I think everybody should think about things, and you should too. So here are a few things that we start to confront starting in the first class, and we'll have an in-depth discussion about this. You are the obstacle. If you're looking at your losses and so forth, and you think it has to do with things outside of you, you are unfortunately mistaken. So much of the experience that you have in the market is due to you. I'm going to share in the chat. Thank you, Emmanuel. I appreciate it when people let me know they understand things. I'm going to put in the chat a couple of files here that are too small to see if you're just on the screen. Oops. So this is the cognitive bias chart. You may have heard of this before, you may not have, but if you've ever seen one of those one of those optical illusions where the two lines are equal length, but because of the arrows, one seems longer, one seems shorter. The fact is that even if you've heard that, even if you know you're gonna see that, when they first put it up on the screen, the illusion happens. You can't help yourself. That's the nature of a bias. And there's not just one, there's a bunch of them. And we'll go over each of these and how they affect your trading, but also how they affect almost every other financial deal you've made in your life. So it's well worth your time to take a look at these as you make decisions. And perhaps you will be someone who helps others see their own biases, because the real cure for this cognitive bias is to have a second mind look into your problem with you so that they may not be biased by the same things you are. And that's how to do it. The second thing I talked about earlier was, and this is part of the foundational aspect, is you really have to know your counterparties. Okay, you have to understand what the other guy is trying to do when you're making a trade. And if you can do that, if you have a sense of what the other participants are doing, it's really very helpful. We'll go through this a great deal. And just the thought that you should worry about the other guy is probably a change for you today. Now, some of you may already be involved in trading. You may have your own system. You may be just doing the thing, and maybe you want it to be a little better. Perhaps you don't have a system. Perhaps you've been afraid to start. You really don't know what to do, etc. So whatever is the case for you, we're going to take you through a few of these, or in the case that you have your own system, we're really going to focus on yours for you and make it so that we have, again, that minimally viable system that starts to make a profit. So assuming we have that, the next phase is to scale. If you can do something that makes you, I'm just going to throw out a number, 2% at a time, then with a combination of different leveraged instruments, it can certainly make you 4, and sometimes it can make you 8. So leverage puts a profitable system on steroids. What does it do for an unprofitable system? It puts it on steroids. So you have to be very, very careful with leverage. First, we start to implement your system. Then we improve it. And leverage, you see leverage, it's the last thing. It's not the first thing once you get a good result. It's the last thing. And how do we know when it's time? Well, we take a look at a bunch of different ratios in order to figure out if you're skillful or lucky. Now, I'm not going to embarrass anybody. I'm just going to embarrass myself and ask, who has had a series of successes and thought, my God, this is it. I found the Holy Grail. I'm going to put a bunch more money in here. I'm just wasting time not trading. Well, I certainly have. Okay. And the thing is that is a bias. It's called the small sample bias. When you start to come up with a system and do one of those back tests, you are following in the foot of very famous people, Niederhofer, the guys from long-term capital management. Every catastrophic hedge fund collapse begins with the same thing, a great back test. And the thing is that it really fools you. If you've done some back testing before, whether mechanically or just eyeballing it and so forth, it's hard not to get enthusiastic with the wins. But what I'd like to do now is introduce some rigor to your examination of these systems. And this is one of the big things I want you to come away with today, that just because you've made a profit doesn't mean that you were a genius. Okay, here's a price chart, and I know there's a little delay here, so I'm not going to really rely on the answer, but what do you think the direction? What do you think the direction of this trend is? Just use your eyes. You don't have to, you don't have to be scientific about it or anything, but I think we'd all agree that the trend is down. And here I've drawn a trend line which goes through the middle of the prices. Now, some people like to draw their trend lines at the top. Some people like to draw them at the bottom, etc. I've drawn it through the data because what I want to say is that this is a signal. This trend line can act as a signal. Imagine that this is the actual message. You're looking at this on an oscilloscope, perhaps, and there's all this static around it. But really, from this day, the gods had determined that it was going to end up down here by the time several months were done. So that's the assumption of dividing this in between signal and noise. And I've taken a look at the signal here, and this started at 465. It ended up at 375. That's about a minus 20% return over the course of however many days this is. So imagine that you had a super short sniper system, and if there actually is one out there, I don't mean anything by it. I just made up this name because everybody likes to trademark stuff. Anyway, your system, which was mostly short over this period, returned 35%. Now, if you look at something like this, and you know how to short stocks, if you do, thinking that there'd be a 35% return in a series of shorts isn't really out of the ballpark here. Okay, so lucky or skilled, some people don't care because, gosh, you outperformed your benchmark by 55%, and that is super professional level. Was it lucky or was it skill? And how can you tell? Well, I'm going to tell you how you can tell right now. This is important for you to evaluate yourself. It's important for you if you're ever in a position to be evaluating someone else's performance, because very many times people come up to me with investment ideas and, they're great. I'm not going to do it. I'll give them some of my money to, to do their trading system. But I want to know, is it luck or skill? So step number one, count the number of days that the system was long and the number of days that it was short. Create a percentage of long short days. For instance, let's say that your system was only long 35% of the time, and most of the time, 65% of the time, it was short. Yay. Now, what we're going to do is we're going to, instead of looking at the prices, we're going to look at the returns. So the return from this day to that day is perhaps 1%. The return from here to there on a particular day might be, minus 3%. Anyway, we're going to calculate all of those returns instead of prices. And then we're going to do one more, we're going to calculate all those returns. So your graph is going to look like this, right? Some days it was really up. Some days it was down a little. Some days it was down a whole bunch and up a whole bunch the next day. This is an area of increased volatility, right? Here's an area of decreased volatility. Well, no matter, we're going to calculate those returns, and we're going to sum the positive returns, and then we're going to sum the negative returns. Then we're going to create a random number generator. Instead of your system, which of course is very sophisticated because you designed it and so forth, we're just going to come up with this dumb little thing, which is like a roulette wheel. And 35% of the time it says long and 65% of the time it says short. What would our result be then? Well, The luck in your return is equal to 35%, that was the long choices, times the sum of the positive returns, plus 65%, the sum of the negative returns. And all of this can be ascribed to random return in the sense that a crooked roulette wheel or a weighted coin could, through this period, simulate the performance of your system. So we take that random return, we subtract your return, and we're left with a predictive index, which is the predictive power of your system. And very frequently, it's under 10%. So it's not something that you might want to bet serious money on. So stop for a second. What if you were so certain you were doing the right thing that you could stop looking for more courses or gurus and instead just concentrate on a system that worked for you? Could you imagine the change in your life if you knew with statistical certainty that you were headed in the right direction? Would that change anything? How would your trading change if you knew that help was a Zoom call away? What would change for you if you could relax into that certainty, if you could relax into knowing that you were doing the right thing? And instead of trading alone, or boy, I know some people who trade on these Discord channels, they get option signals left and right. Instead of all that frantic stuff, what if you were just part of a successful team that supported your ideas? That's the question. That's what we're working to build here. So at that point, you've actually gotten into the top part of the pyramid. You're actually into succeeding. And what will be happening for you is that things will change as far as your assets go. You don't have to look at this very specifically, but here's what happens as people become worth more and more. They generally have a business, and in your cases, that would be their trading business, and it just becomes a larger and larger part of their wealth. The rest of the way that they distribute these assets, the way they diversify their assets, is not necessarily about some pie chart with regression or whatever. Diversifying their assets generally is done because of tax purposes. And let me tell you, as the younger people I imagine you are, you're probably all under 60. Taxes are your biggest risk, not market volatility, but taxes. That's going to take a chunk of your money until you get that part under control. So look, if you're to the point where you're serious about trading and you're really making a go of this, what I use in my practice is an app called Elements, and you can download it on your phone. And what it does is it's like an MRI, or it's like an EKG for your wealth. In real time, some of these quantities and indexes are calculated, and I can use them in order to help you come to terms with some financial decisions, some issues about trading and taxes especially, and so forth. Most importantly, at least for me, is the financial independence part. You can get to a point where you know whether or not you have that financial freedom. If your total term, that is, if you've got 17 years of money saved up, if you could live on 100,000, well, here, let me put this a different way. This is called your total term. If you liquidated everything, this guy would have about 18 years of living at his current lifestyle. So as a young guy, that's not quite right. He really needs to get up to 40, but you can see this ticking away every day. And if there's a big change in your life that has to do with employment or a business opportunity or something like that, this matrix can really help you make some good decisions. And many of my clients have their own businesses, and you guys are making trading into your business. It's just the same thing as if you owned a construction company, a shoe company, whatever. You want to treat the macro issues the same way. And it's my hope that as you are able to do this and take care of everything, that you'll start to move up this ladder. For this course in particular, and for traders like you guys, you're not going to have a shoe factory or a grocery store. You're going to have a development algorithm where you're constantly implementing and improving your trading system. You're going to start a algorithm factory. Don't be thinking that you're going to get one system and use it for the rest of your life. It will not work, period. There's nothing that's static in finance. Okay, but what you do want to do is get to the point where you can develop, critique, scale, improve your results. And let me tell you, the really fastest way to do this, the best way to leverage, is to be good enough that other people want to work with you. Whether they want to work with you just as in a design consultation thing, or they actually would like to give you money, or you are good enough at this that someone with client money wants to use you. There are so many ways to do this. If you just want to trade for yourself, certainly you can. I've seen people start that way, but eventually it becomes apparent that either they're not good at trading and they should stop, or they are good and they would really be so much richer if they would just figure out how it is to let other people in on the good stuff they're doing. And that's part of what happens in the third part of the class. So right now, and timing is everything, we're in a unique situation in history. I would say that in the last 20 years, we've gone through 5 once-in-a-lifetime situations, with a plague, a world war, a recession, a depression, and, God knows what else. So this is the time to make your decision. If you've been at the Lumi Wealth website, LumiWealth.com, they've got some headings at the top where it'll describe the class. And I think they're still describing this class as either Bulletproof Trader or Trading as a Business, whichever. I mean, we morph this quite a bit. The reason we do is because it's customized to you. Okay, I'll get into that just a little bit later when I tell you that here's how it'll go. When you start with this, we'll need to talk because I need to know about you. But the first thing, or one of the first things we'll get into, are professional level algos. Okay, I'll give you the access to the same programs that hedge funds and dark pools use to disguise their activity, so you can scale in and out of positions just like the big guys. You can execute grid strategies just like market makers do. And if you went out and had someone teach this to you, it'd probably cost you on the order of $1,950. We will definitely now start with the fully disclosed momentum system. I say now because momentum upwards is actually starting. Anyway, I'll show you an easy to use, visually based system. Has you in the market at the right time, on the sidelines when you should be. Other people have sold this for $5,000 or $8,000. I'm just going to value it at $2,750 because a bear market option strategy. I don't think we're out of the woods yet. So it's important to know how to take money out of the market even when the stock you're holding isn't going up, and to keep yourself out of trouble when prices are going nowhere or worse. We've discussed the mental bias busting framework. There's at least 15 of these ingrained subconscious patterns from deep in your lizard brain, and these make you lose consistently. I want you to be able to spot, confront, and neutralize these automatic mistake-generating programs that run your mind. You'll find that these sub-programs have been responsible for more than half of the losses you've ever made in your life. So I'm not going to put a value on this because you'll get it. Option forward projection. I haven't seen this anywhere else, but I will show you with the aid of some software how to use total option data to project future price moves with some simple and direct formulas. Even some programs that do this do a large part of it for you. We'll talk about the mechanics of scale, and how to take a successful system, scale it, and double your return on investment in under a year. Now, the key here is successful system. And I'm assuming that your successful system on the money that you have might make $10,000 a year. Maybe I'm wildly wrong. Maybe you're going to make $50,000 a year. I don't know, but I hate to exaggerate. If you can make $10,000 a year with your system, the mechanics of scale will show you how to make another $10,000. Now, if you're an advanced trader, you've been doing this for a while, you're level 2 to 3 on the Freedom Framework, or if you're a business owner who is also wanting to trade, whether that ties in with your business or not, you can have access to the Elements app, the Livestream virtual family office experience, where you'll get tax expertise, asset protection, family security, trust and estate planning. That's valued at $49.95, cheap for the price. And this is, to me, the most challenging and yet exciting, and it's the consult on demand. I'm going to give you 10 hours of direct 15-minute conversations with me by Zoom. So 40 touch points as you move through your project. I valued this at $59.50, and let me tell you something, I am not allowed to exaggerate like some people are, because I have a license. I have a license to be a financial fiduciary. I can't lie and keep that license. So I charge people $300 an hour, and people pay it. I know that because the mortgage is still paid. People pay it. So I'm not exaggerating about the value of this. So in all, what you get is 10 weekly classes, replays and documentation, professional level algo access and training, the disclosed momentum system, option strategies, properly spelled option strategies with the right formatting, a way to scale, really, and more. So the transformation for you is going to start with an appointment with me, because we're going to create this course based on your unique strengths and weaknesses. And I look forward to the Zoom call. If you think you have no weaknesses, prepare to be surprised. Again, back to the New Jersey bluntness, you must recognize what you're doing wrong in order to do it right. So it's a way to stop this random madness and actually create the tools that you need. So you begin at LumiWealth.com. You look for that tab that says Bulletproof Trading. I'm going to go over some frequently asked questions. We're getting toward the end where you're going to get your bonus that I promised you. So people ask, is there a guarantee? Let's do this. If you sign up for this course right around week 3 or 4, let's just have a talk and see if it's for you or not. And if it's not for you, I don't want to disappoint you. I don't want you mad. You can have your money back as long as you've done the work. If you've just sat around and done nothing, not participated, etc., I've wasted my time on you. So let's see. I missed a slide here, and it totally changed the meaning of this. So please indulge me. Is this class worth the money? And I'm going to say no. It needs to be worth twice the money for you. So you need to be somebody who actually does have an account and you're trading real money, and it's your intention to grow your wealth through trading and through other means. That's fine. But you need to have the intention to use this stuff. I don't want you to waste your money. And I don't want you to waste my time. Along those lines, people will ask if their husband, wife, partners, kids can join in. Also, absolutely they can. I would love it if you had your own team as well. Every so often, you run into some people who are just kind of smart asses and they ask, if this is so good, why are you sharing it? If it works, why are you charging money? And so forth. So, first of all, nothing I'm teaching you has a small capacity. Capacity is how much money you can run into a system. So if this system has to do with trading indexes, there's no way that anything I tell you is going to affect anything I'm doing, because I just don't think you're going to move the market before it moves on its own. I'm sharing it because there's room for everybody. I do this work. I do this work because, as I said, my life is enriched by people and the things that we can do together. And, I'm just greedy for more of that. So I work to make people's lives better. I don't do it for free, but I don't charge for everything I do either. Okay. So which course level should you take? That's a great question. If you're getting to the point where you can see the visionary part from here, you don't have to be there yet, but if you can see it from here, then you should take the advanced course. And if you have just gotten to the point where you're starting to have some financial security, saving a little, that kind of thing, then just the regular course is for you. Okay? Could you do this on your own? Well, you're already doing it on your own. I don't know how that's working out for you. Not my respect to Dr. Phil, but I've done it on my own, kind of, but I've spent thousands of dollars on courses and I've had some real bitter experience. So I would say you can, it's just going to be way more expensive. People are very concerned that this is a course on trading psychology or positive mental attitude. And look, all that stuff is important. We really are going to go deep, but there are numbers here. There's hard data. There are concepts that are market related. It is not an airy-fairy course. Let's see, will this help my other investments, the one I'm not trading? Absolutely, that's what this is for also. We're here to grow your wealth. As I said before, you might find out that growing your wealth involves you not trading. You might find out that growing your wealth is a fun thing you love to do and you're doing it well. That's the purpose of the course. Is it kept up to date? Indeed, it is. This course changes all the time, and new things come up and you'll see them either in the Discord chat rooms from Lumi Wealth or on the Tuesday night discussion hours. We have a lot of talks about the newest stuff. Will we address taxes? We will. I'm not a CPA, thank God. I don't have the head for that stuff, but I do have to understand the large level or the 30,000 foot view of taxation in order to counsel people. So we will go over it. And I hope for all of you that you get to the point where you really need to spend some money on an accountant, because that means you made a bunch of money. So I hope that happens to you. Will it help you run a hedge fund? Yes and no. Again, if you're good at this, there are people who want to put a lot of money behind you. I did not ask what kind of return you're trying to get on your money. I did not ask what kind of return you're trying to get. But let me tell you, and this will probably surprise you, that there we go. That wealthy people will throw money at you hand over fist, millions of dollars. If you could get a 12% return with a 4% volatility, if you could get 15 and 5, you could possibly be running more money than you ever thought possible. So for those of you who are thinking you need to double your money every 3 months, you really don't need to. On the other hand, running a hedge fund requires lots of people. And in Lumi Wealth, and among the people I know, there actually are sets of people. You need compliance officers, you need some legal work, you need just a whole bunch of stuff, but we have all that. So if you become good enough, it's not out of reach, but it doesn't happen if you don't start. I no longer give financial advice. I no longer do financial planning. I engage in financial progress. So people need to, I mean, in my day job, people need to actually be making progress toward their goals. When I was a when I was a chiropractor, I used to talk to people about their health. And one thing I found is that planning, good intentions, none of that means anything. You actually have to start now. Again, you're living through the fifth once in a lifetime event ever. I don't think the opportunity is going to get much better. And thank you all for staying. I appreciate your time. Your time and attention are the most precious things that people have anymore. No one has the attention span of a goldfish anymore because we're so inundated with social media and so forth. But you guys stuck through this, and I hope that you stuck through it because you care about your family. You care about the things that will help them. And I hope that you also care about, the world and people in it. What I found is that once people get to the point where they have enough and they really know they have enough, they start to do good because they've done well. And I hope that that is something for you also in your adventures in the market. So as I said, I promised you a gift. Let me make sure I'm sharing the screen to do that for you. There we are. Okay. You did stay till the end. I hope you've written down some things that might have come up for you as I was speaking. If you have any questions, problems, if you've written down this stuff, your gift is worth $295. It's what I charge for an hour of my time. And feel free to use this Calendly link. And I believe it's called a long conversation. It's 60 minutes. You don't have to use it all up at once. You could do 30, 15, whatever you want. But I'm not going to sell you on this course. I don't need you to take this course. I don't even need my next client. I do what I do because I love it. And if you have problems, if you have a question, if you have a great idea that you just want to run by somebody, I'm here for you. This is where you make the appointment. And I don't know what's stopping you. Here's one other thing, and I want to really emphasize this. I make these great offers for time and courses and all that other stuff. I make the offers. I can be this generous with it. You know why? Because no one hardly takes me up on it. I mean, if I thought that all of you guys would sign up tonight, I couldn't tell you that I was going to give you 40, 15-minute conversations. There's not enough of me. In fact, I could see kind of cutting off the enrollment at some point if there was an avalanche of people. Anyway, what I know is that you can offer people many types of advice, many ways to be helped, etc., and most people will not take it for whatever reason. I don't know, maybe it's their karma. But I also know that the people who do take that help, the people who are open, who are ready to change, to achieve what they want to, they take the help and they use it. And nothing is more fulfilling on either side of the equation than seeing somebody really progress and get that. And that's what I'm hoping for all of you, that you guys are able to achieve that kind of thing. So I'm going to go over to the chat. I know that there's such a delay on this. It drives me nuts. But if you have any questions now, feel free to ask them. I'm going to stay on for just another few minutes. I promise just an hour. But you've got the link. You can call me. You can talk to someone with 40 years of investing, trading, et cetera, experience. And I'll be there for you. I'll act as your fiduciary. I will put your interests first, and whatever I tell you will be the right stuff for you, not me. So thank you all. I hope that I see you on a Zoom call, and I hope we get to talk real soon. So take care, and be well.